right. Well, thank you guys for joining us today. We do have Nicholas from Absolute Mortgage here to discuss with us how to navigate the current summer market. So for those of you that are on vacation, enjoying the time with your family, go ahead, work-life balance, fabulous. But those of you that are willing to step ahead of your competition before we get back into season, this is your time to shine. A lot of the competition out there is on vacation, they're dialing down on their marketing, while others, you should be doubling down on all avenues, whether it's, your cold calling, emailing, your marketing, and leveraging the lack of competition in the market. But that being said, there's no such thing as competition other than yourself. So strive to be the better than you were yesterday, and as long as you continue making slow, small steps, continual improvements every day, you'll see success around the corner. All right, so without further ado, Nicholas, I have here, want to give us some insight on the summer market?
Yeah, of course. I mean, we're in June, middle of June now, and as we have seen, at least in the South Florida market, the demand is up. There's plenty of buyers out here, and just like we spoke about, a couple months ago, Amy, that there was a short window of, buyer kind of being a buyer's market where buyers were able to, negotiate for, large amount of seller credits to pay their closing costs, negotiate, down the asking price. Well, in my experience, that window is almost over. It's pretty much over. I'm seeing multiple offers on almost every listing. I'm not seeing seller credits as much as we were the last couple months. So, just like Amy was mentioning, now is definitely the time to double down, really put in that elbow grease, really put in the work, because it's not going to come easy. And if you want to, be ahead of the herd, it's time to put in the work now while others are, relaxing on vacations and not really putting that work in. So that's what I'm seeing really is the market's heated up. Plenty of buyers moving down here to Florida, especially now in the summertime. Their kids are out of school and they can make big changes. I mean, I would say half of my current pipeline is people moving from other states into Florida. They're selling properties in the northern eastern area. As we know, New York, New Jersey, Massachusetts, all those properties are extensively higher than some of the properties here in Florida. So they're selling properties over there, they're putting a lot of cash in their pockets, and they're buying property here for half of the amount of what they're selling it for. So those are the buyers that we have that are the people in Florida, the natives in Florida are up against. So definitely want to be ahead of the curve here. So
right. So as Nick was saying, we still are experiencing the great migration down here to the great state of Florida. That being said, we are seeing a lot of out-of-state buyers coming down here with cash from their previous sales and helping speed up the market. And stepping off of what you said there, they are competing against the Florida locals, and we can see the migration for the Florida locals as well, moving from South Florida on up to even the Treasure Coast area. Mm-hmm. But that's actually what I wanted to segue into. We have a lot of cool new programs coming out, but the first thing I want to dive into is actually going to be the Ron DeSantis passed most recently. It's going to be active July 1st for the immigration policy. So foreign buyers, we actually saw foreign buyers come into the market, especially during, right after the height of COVID. 55% of them were cash and come in and pretty much outbid everybody. But these foreign buyers are now going to be restricted, specifically for specific countries. I'll go ahead and I'll link those countries down below. But a few of them, just to give you some context here: China, Russia, Syria, countries like that. If you are a foreign national, you will now be limited to not being allowed to, one, buy agricultural real estate. Now, keep in mind, this could be, farms, but even residential real estate. So for those agents here working Wellington, Loxahatchee, the farms, these areas are going to be subject to, especially if you're working with these type of clientele, these restrictions, as well as restrictions on buying not only agricultural, but essentially any land within 10-mile radius of any large structure, such as a U.S. military base or even an airport. That being said, we have Palm Beach International Airport right here, a few Army bases nearby. So just keep that in mind if you guys are continuing to work with those foreign buyers. Let them be aware ahead of time, because the last thing you want is to go through a closing and get slapped with some information on title and they can't proceed, right? One thing. So second thing, we have another program coming. It's actually in existence already, but is actually going to be expanding to help a lot of Florida locals out there that are working, full-time hours, local jobs, the Hometown Heroes program. Now, initially this program was for first responders only, right? But now it's expanded to a plethora of different jobs, including real estate agents, right? And starting July 1st, they're going to be expanding the down payment assistance, not just for your down payment, but you could also apply towards your closing cost as well, up to $35,000 in assistance. So Nicholas, if you want to just speak some more on that, I would appreciate it.
Yeah, of course. So the skinny on that is it's assistance up to 5% of the loan amount, not to exceed the $35,000 that Amy mentioned. Prior, the current program that I guess is ending at the end of the month now, June 2023, it was up to $25,000, so they raised it an extra 10 grand. And like Amy also mentioned, it is no longer just for first responders, teachers, etc. Now they're opening it up to basically any Florida full-time worker for a Florida-based company. So what does a Florida-based company mean? The guidelines on this is any employee that works in a brick and mortar location, so an actual physical store here in Florida, for a minimum of 35 hours for every single week. Now, if your client or yourself, maybe you work remotely and you don't work in a brick and mortar location, you could possibly still be eligible for the program. Now it gets a little tricky, and that's why you want to just you'll need to speak to a lender like myself that is seasoned using a program like this. But if you are remote and you don't work in a brick and mortar location, the company you work for needs to have a location in Florida, and they need to be on sunbiz.org, which holds all these Florida businesses. Their address on Sunbiz needs to be the Florida location, and the address on your pay stub also needs to match that address on Sunbiz, and they all need to be a Florida location. Again, speak to a lender. We could assist you on making sure that you would qualify. So that's the new program. Now, like Amy mentioned as well, this could help you pay for your closing costs, a portion of your down payment. And it's actually a really great program. You're actually, what I've noticed is the interest rates are actually discounted from what the current market is offering. And then lenders are not able to charge any points or any discount points. So that the fees from the lender side are actually very, very low. It's actually a great program. We're closing them in less than 25 days. There's no, extra, hurdles you really have to go through, as long as you're working with, again, a seasoned loan officer or lender that knows what they're doing to make sure, your loan and your situation fits in the guidelines. So this is starting July 1st, which is really July 3rd, which is that Monday. Now, the current Hometown Heroes program, I believe it was $100 million that Ron DeSantis, put in for the program. That's all been used up now. They actually just sent out a email 2 days ago that all the funds have been used and reserved. So as of right now, you can't even lock or reserve a Hometown Heroes loan until July 3rd. So that just tells you that this money is not, it's not forever. It's not unlimited. It's limited. So if you are thinking about using this program, you definitely want to make the move now and start working with the lender, get pre-approved, and take advantage of this great program, this great assistance before it runs out. Before, again, it was only for first responders, teachers, police officers, etc. Now it's opened up to almost everybody, so you could just imagine of how much quicker these funds will be used. So that's, any questions on that, Amy?
Excellent, thank you. It's great to hear that it is expanded across the board, and a good rule of thumb, at least in the mortgage world, right? If you have a W-2, you're on a pedestal. W-2 jobs are really one of the easiest to get approved for a mortgage. But I'm interested to hear, because this program is expanded, how those that are self-employed on 1099, how can they qualify for this?
Great question, Amy. And I actually just spoke to some of the representatives at Florida Housing that are, managing the Hometown Heroes program. So their, commentary on this was, if you're a 1099 employee or self-employed in the state of Florida, as long as the company that you either own or work for is also in Florida, again off of Sunbiz. Now you need to show proof that you work full time. So some ways to show proof would maybe be a schedule. Showing your hours that you work per day for, a month or per week, signed off by the owner of your company or the broker if you work, or you're a real estate agent like Amy is, proving that you worked a minimum, again, of 35 hours per week for every single week. So that would be one way. And you basically just have to show proof. I mean, if you have pay stubs that show how many hours you work, even if you're on 1099, that could be used. Schedule was the key word that she mentioned would be, a great resource to show proof.
Excellent. All right. So that being said, guys, be sure to utilize this program to your advantage. Whether an end user, go ahead and reach out to a mortgage officer like Nicholas here, or if you're an agent, be sure to look into it so you can share with your clients this great new program, because we definitely need it, right? So that being said, we see that the market's heating up now. The Hometown Heroes program is about to get expanded across the board. And yesterday we had the inflation CPI numbers come out, which was some pretty good news. So Nicholas, can you share some more with us about that?
Yeah, it looked good when they first released the numbers. The bond market was actually rallying in a positive way. Quickly thereafter, everything turned around, and the day did not end so great for the bond market. Once they dove into the numbers, they saw that used cars were actually still increasing, and they weren't decreasing as they were projecting. The previous couple months, used cars were starting to decrease. But as we saw for the month of May, used cars are starting to increase back again, meaning that the consumer, are still buying used cars, and they're buying them, at light speed, numbers, and they're not slowing down. So what the Fed is wanting and what they have been mentioning and asking for is for inflation to start to lower, and they basically want the consumers to stop spending all their money, stop buying new cars, stop traveling, etc. And the consumer, if you go to a mall, if you go to any area, you'll see the consumer is out, people are buying like frenzies, and you would not expect that the rate of inflation is where it's at if you just go to any mall on any weekend. I was just in Orlando in the last weekend, and every store was packed. Lines out the door at some of the stores that had sales. So that's what the Fed does not want. The Fed wants the people to stop spending so much money. So once they broke down those numbers yesterday, they realized that people are still outspending what they were projecting. So as we move forward, hopefully, in the months of summer, people don't travel as much as they usually do. They're projecting by the end of summer for a lot of the cash reserves that people had in their bank accounts to start to basically lower because of all the spending that everyone's been doing. So once that happens, hopefully we do start to see inflation continue to keep decreasing, and then we will see interest rates follow and start to decrease.
Right. All right, perfect. And for those of you that are not too keen on what's been happening, inflation was at 8%, and the CPI numbers came out yesterday, correct me if I'm wrong, 4%, but they're targeting 2%.
Yep.
On a personal level, we don't have to even publish this. Do you foresee that as a realistic goal to hit with everything that's been going on?
So, like I've mentioned on the previous podcasts we do, the Fed usually either raises rates for too long or keeps rates at zero for too long, like we saw back in 2020 and 2021. So I think the Fed, if they're waiting for inflation to get to 2%, they're going to be behind the curve. As we know, the numbers that they look at are in the past. So by the time, if they were to wait till we get to 2%, again, they're looking at numbers in the past. It might be too late, and they might do more harm than good. As we already saw, a couple months back, we had a couple banks fail due to some of this same, circumstances. So in my opinion, I don't think we should get to the 2% before they start to either, start to cut rates. but the Fed is notorious for waiting too long to make a pivot. There's actually a Fed meeting today at 2 p.m. that we're hoping that they put a pause on hiking rates. But like a lot of the people that are specialized in this field in the mortgage market, the key word that they're looking for is the word that the Fed uses: pause, skip out on raising rates for this month. As just that one word that they use could make a dramatic impact on the market. Because if they say we're going to pause rates for now, that would help. But if they say we're just going to skip this month, then next month we're going to continue with our rate increases of 25 basis points, that will not do well, because that's going to show that the Fed is not confident and they're getting ready to continue to raise rates. So what it really comes down to the meeting, how they feel, how confident they feel, how investors take it. Again, the market is always impacted by how investors trade and supply and demand. So it's going to be exciting. Hopefully, it does well for us, and the bond market does have an impactful meeting after the meeting. So we'll see.
Perfect. Oh yeah, and I mean, the financial market loves confidence, so hopefully we start to see that after the Fed meeting today. But that being said, I mean, at least on the real estate standpoint, we saw that, like you mentioned, we had a fluctuation, a little divot in the past 3 to 4 months, and even going back to last summer, we saw demand drop off, because back then we were wondering what a recession even is anymore. The definition changed at that point. A lot of hesitation in the market this time last year, and we saw it pick back up a little for season, and now here we are back in June, and value wise we saw, well, first off, everyone knows this, I mean, housing prices went up 44% in Palm Beach County, but now for the first time in a while we're actually seeing it come down a little bit. The median average home value in Palm Beach County was about to hit that 600,000 mark, and now it's back at 465. And just going off of what Nicholas had mentioned here, that as we see rates fluctuate, it's important to keep in mind that interest rates, when they go up, prices come down, and vice versa. So for those of you, especially those that want to utilize this Hometown Heroes program, do not wait. It is absolutely important that you focus more on the monthly payments, because no matter what, real estate has historically been known as the hedge against inflation. Real estate over time and long enough run will always go up, just for simple supply and demand. And at the end of the day, we are still at a 4-month supply of inventory. Now, a balanced market is 6 months worth of inventory. So that tells us statistically we are technically still in a seller's market. So for those of you that are waiting for prices to come down, just expect, interest rates will be up, and they're coming down a little bit already here. So that being said, those of you that are seeing some bidding wars come out, if your agent is not recommending you techniques in order to win every single bidding war, you need to get a new agent. So be sure to give us a call, ask Nicholas here on the tactics you can use to win those bidding wars. And ultimately, even with these cash buyers that are coming out, if you're competing against cash and you know it, to get fully underwritten to make your offer just as good as cash.
Definitely.
All right, so anything else you want to touch base on as far as the market?
Well, I guess in our area here, Palm Beach County, as you know, we have a lot of large companies moving down to South Florida, making their headquarters in Palm Beach or Miami. I just actually saw an article that Citadel that has moved down to Miami. They're bringing a lot of interns down from New York, and the salary that they're paying their interns is extraordinary. So that just goes to show you that if these very large companies with a lot of cash on hand are bringing all these employees down to Florida, you could just imagine that these employees are going to be purchasing real estate, renting real estate, and that's just going to continue to raise the market here.
So sorry, I can't get my phone to be quiet.
So yeah, definitely. I'm sure you've seen that too at New Day USA, Goldman Sachs. There's a plethora of large titans moving down to Florida. I've already moved down to South Florida, and they're bringing their employees here. I actually just worked with a client that works with BlackRock, and they're starting to relocate their employees down to South Florida as well. So they're purchasing real estate, and not just the employees, but these companies themselves are investing in real estate in our community to rent out as an investment. So if that doesn't give you kind of a heads up that you should probably own real estate too, then I don't know what else to tell you.
Right. Yeah. Actually, just a couple weeks back, BlackRock closed out their largest seed funding ever. On record, actually. So that's another thing that we saw during COVID was all these institutional buyers coming in and buying specifically single-family rentals, single-family homes that they're turning into rentals. And guys, they just closed out another round of funding. So what does that tell you? They're getting ready to buy again. So be sure to beat them to it because there's such a limited supply of inventory. And at the end of the day, it's all economic supply and demand. A lot of these institutional investors, these bigwigs, deep pockets, they're coming in and they're very bullish, specifically for Palm Beach County and South Florida. I mean, we're seeing new developments pop up left and right. If you want to find out more about those projects, be sure to follow me for more.
Yeah, definitely. I mean, to segue off of the new communities, have you seen a difference on, I guess, the type of properties that are being built? More multifamily properties, more, co-ops and condos, stuff of that nature? Or do you see mostly still single families being built?
I would say single families, and then we're having a lot more high rises. We're going up, at least in downtown Palm Beach. But yeah, single families.
I've noticed a lot of co-ops going up too, and then even in like the St. Lucie County, where historically they didn't really allow multifamilies or zoning for multifamilies, and now that I'm noticing they actually have multiple different communities where they're building multifamily properties. So that just goes to show you that the housing market, as we all know, rents is increasing, property value is increasing, so they're starting to open up and they're starting to allow multifamilies, because multifamilies historically are a little bit less for rent per door, and a little bit less to purchase as well. If you're going to buy let's just say one side of a quadplex or one side of a duplex, it's usually less than just buying your own single family on your own lot. So that's a big indicator, if they're starting to allow multifamilies in areas that they weren't prior. That goes to show that there's definitely a low inventory, low supply of inventory, and the land that they have to build on, they want to maximize it and build as many doors as possible on that land instead of just buying single families like prior. So that's also another indicator that rent and property values are likely to continue to increase. So definitely would suggest purchasing and fixing your monthly expenses for housing instead of just getting bit by inflation every year and having your rents increase every year. So
yeah, I mean, especially with interest rates too. I'm glad you mentioned that. I mean, these investors, at the end of the day, the numbers have to make sense. If the interest rates are high, the rents are going to go up. At the end of the day, whether you like it or not, it just has to cover their cost. And I mean, you could blame the landlords all you want, but at the end of the day, it's economics, right? So that's another thing to keep in mind is like, all right, well, we're seeing the mortgage rates go up. They're not going to stop buying, and the rents are not going to go down either. I mean, how many times in history has rent gone down? Yeah,
not much. And I actually just saw another report on investors. Actually, I think the number was it was a mortgage company that their volume of investor loans actually decreased by about 40%. And that goes to back to the Fed, back to the government of as they subsidize our housing in the United States. We have Fannie Mae, Freddie Mac, and FHA are the largest government enterprises that basically subsidize money so people can buy houses. They added LLPAs, or loan level price adjustments, just recently, and they really hammered investment loans and second homes. The reason for this, they made it a lot more expensive to purchase an investment property or a second home using a government sponsored loan, Fannie Mae, Freddie Mac, or FHA, because they want to use this money for people buying primary residences. They don't want to basically subsidize investors and people buying their vacation home, second home, Airbnbs, so they made it a lot more expensive. And how supply and demand goes, if there's less demand because the prices are much higher or the cost is much higher to acquire one of these loans, then there's just going to be less investors using these loans. So we see a lot of investors using commercial loans, business purpose loans, non-QM loans like DSCR loans instead of the traditional conventional loan, which honestly is probably a good thing that they added these loan level price adjustments to make it more expensive for investors, so that the average family that are looking to buy their own house to live in, they have the money available from these government sponsored enterprises, and they could take advantage of buying their primary houses instead of all this money going to investors and second family and people buying second homes. So that's another thing that we're seeing. Now on the same token, this is a what's the word for an opinion that's different than the masses. What's the word for that, Amy? A controversial opinion, I guess. But I honestly don't think interest rates should drop just yet, or at least drop significantly just yet. I think interest rates should probably remain where they're at for a bit. Reason being, if interest rates were just to drop, let's just say they drop down back to 4s, 5%, low 5%, the demand would just skyrocket. The amount of buyers that would just enter the market would just skyrocket, and we already have a low supply. I mean, again, back to what I was saying before is, I'm speaking to realtors and they're getting multiple offers on their listings. I mean, 20, 30 offers on one listing. And that's with interest rates as of today, 6 to 7% for primary residence. I mean, 8, 9% on some investment loans. So just imagine if interest rates were to lower, the demand would just skyrocket, and then instead of 20 offers, we might see just back to 2020, 2021 numbers of 30, 40, 50, 60 offers, which won't help the market already. So I guess that's my controversial opinion, is I don't think interest rates should just lower just yet. I don't think that would help the market. We already have a low supply as it is. So.
Right, and that's one thing to keep into account. I mean, back in the 80s, we had stagflation, and look at interest rates back then.
Mm-hmm.
We're not even near that. We're actually doing pretty good if you look historically. I mean, we're at 7% now, roughly, and before we're looking at like 13%, if not higher. So that just goes to show, at the end of the day, focus on the monthly payment. That's what really counts.
Mm-hmm. Yeah, exactly. Focus on the monthly payment, and then what's this saying? Marry the house and date the rate. So what I'm telling or advising a lot of my clients, people I speak to, if they're comfortable with the current monthly payment, if they can get qualified for the house that that fits their needs, don't wait for interest rates to lower, because again, if interest rates lower, the demand is going to skyrocket and prices are just going to keep increasing at crazy amounts like back in 2021, 2020. So purchase the house now, make sure obviously you can afford the monthly payment, you're comfortable with it, and then when rates do drop, you don't need to go and have a bidding war with 50 other people. You already own that property. All you'll need to do is your refinance, lower your interest rate down, lower your monthly payment down, and you don't need to go through the stress of a bidding war like we had in 2021 and 2020 when rates were 2, 3%, even 4%. So that's what I would suggest now. Marry the house, date the rate.
That's a good one. And mentioned something along the lines, maybe I'm just speaking aloud here, but HOAs are actually set to be going up as well. We have inspections that are going to be due come December 2024. Now, that is more specific for Miami-Dade, Broward County, but just heeding the warning ahead of time, we're seeing a lot of HOAs get on the ball with this and start charging assessments, raising their HOA dues, and ultimately it does come down to the insurance for these buildings as well. So I was actually speaking with head of an association, and they're expecting their HOA fees to go up 25 to 35, maybe even 45%. So that's another thing to keep in mind as well. When you guys are shopping around for condos, if there is an assessment, take it on. I'm sure we can negotiate with the seller for them to pay it before closing, or negotiate a way for the numbers to work. Otherwise, I mean, if you guys are walking into a turnkey building, I know especially a lot of the ones that are out of state buyers, they want to come into something more turnkey. And just think about perspective wise. I mean, in New York, I mean, like $1,000 a square foot for a condo, and down here we're talking about a couple hundred per square foot. Now, if you guys are absolutely in love with the condo, love the building, love the location, like he was saying, marry the house, date the rate, as long as the numbers make sense, and be sure to ask your agent as well to ask about the HOA fees, get the board minutes to find out what exactly they're discussing in those board meetings, so that way you can aware and anticipate any financial dues that are gonna arise.
Yeah, great point there. That I do see a lot of the time when there is an assessment, people will, just be scared of it, run away from the property. And when if you really, dig deep into the numbers, sometimes, taking on a project that may be not turnkey, like you mentioned, might be the best bang for your buck, and maybe you can get into a property at a little bit lower of a value and take on that assessment or whatever it is. Maybe they're putting on a new roof or so, which will just increase, your property's value over time. But you won't run into some of these turnkey brand new projects that are just going to continually increase their HOA dues of 20, 30, 40%, like you mentioned. So I do see that a lot, and that's a great opinion there, is to don't be so scared of the assessments, really dig deep into the numbers. It might make sense to take on something like that.
Right.
Mm-hmm.
All right, perfect. Is there anything else you want to touch base on?
I think we went over a lot. The hometown heroes again.
Yeah,
really.
do that.
Yeah, that was hometown heroes, a big thing. I think that's going to be the number one resource or tool for realtors to market and to really use for the next couple months. If you're not familiar with it, if you're not using it, if you're not pitching it, explaining it to your peers, circle of influence, you're really going to miss out. So, yeah.
Perfect. So for those of you guys on Zoom, thank you for joining us today. I'm sure, can we get some Hometown Heroes update information? I'll update it into the education folder so you guys can go ahead, one, create the market, two, leverage this market as it is right now, and then expand your clientele base and really leverage these great programs. All right, so is that going to be it?
Yes. All right.
All right. Well, thank you guys. See you next time.
Bye.
And that was really fast.